Hi, I'm Ziva, and today we're going to be discussing Hertz and their use of impression management and earnings restatement.
My name is Fabia and I'll be explaining impressions management. Theory was first introduced by Irving Goffman, and it's the process in which people try to influence the impressions others form of them. Companies try to manipulate stakeholders into viewing them in a certain way, and they do this by regulating and controlling the information which is presented to the stakeholders. There's a number of different techniques used in impressions management, such as excuses and justifications, self-enhancement, which includes flattery, agreeing with others even if it's different to your beliefs, and offering favours, self-disclosure, which is regulating what the public know about the organisation. When companies use external factors as an excuse, their justification is usually seen as valid because this is due to factors that are beyond their control. And now I'll be talking about earnings management. This is the act of disclosing amended financial statements. Managers will usually amend their financial statements to appease either current stakeholders or potential future stakeholders. And there's a number of reasons why they restate their financial figures, including due to accounting errors, non-compliance of generally accepted accounting principles, due to fraud, misrepresentation, or due to a clerical error. Changes in one accounting standard, new information technology, or estimation techniques might lead to an earnings restatement. The errors can be discovered internally through regular internal auditing processes or through third-party interventions. For a restatement to be required, the error must be deemed material.
So, hi, I'm Joe. I'm going to be looking at why managers engage in earning restatements. Often, earning restatements will happen when there's aggressive accounting practices taken on by managers, which then ultimately lead to it being caught out and needing to go back and restate the earnings. Managers are much more likely to follow these aggressive accounting practices if they have their own personal incentives. For example, if there are share options inside the bonus packages, then they're likely to want to boost share price to make themselves better. Managers are also more likely to have to restate earnings if they have a high percentage of accruals in income. So, for example, in a study, it was found that 8.7% of total assets were accruals in companies, which then further had to restate their earnings, whereas it was only 3.9% of other firms. Now I'll be looking at what actually brings the managers to choosing to disclose. So, obviously, if they have to, they have to, but voluntary disclosures can often be the case. So, if they spot something quickly, they may wish to disclose it because you want to quickly change that culture and keep the reputation and a company's legitimacy as high as possible. It needs to build a better working environment for the whole organisation to try and save this company and keep it afloat, especially if it is a big thing that has gone wrong. Voluntary disclosure is much less likely to happen if there's fear of a big repercussion. So if there's a lot of law around it and fear of big fines or being suspended from being a director, you're much less likely to disclose. So actually to have it more based on things such as peer pressure, and if you have people around you disclosing, you're more likely to do it than if, say, you're scared of it.
Hi, I'm Olivia. We found that Hertz was a prime example of a company that has produced earnings restatements. The company has approximately 10,200 locations worldwide, including here in Exeter. In 2015, Hertz had to restate its earnings for the years 2011, 2012 and 2013, which resulted in some negative press for the company, contradicting the positive acclaiming that they provided in the restatement. In 1988, Hertz was found to be charging its customers greater amounts for damages than the actual damages that had occurred. Hertz's legitimacy was put at risk previously, and this could have lost the company a vote of confidence.
Hi, I'm Harrison, and this is the main statements in which Hertz has. This includes vehicle damage receivables and related allowances, data relating to allowances for doubtful debts, accounts payable and accrued liabilities, and they were discovered internally through a regular internal auditing process.
Julie K. Land is a professor at North Carolina Central University and works in the School of Business Accounting. and she produced a paper focusing on the correlation between CEO turnover and the development of earnings restatements. The relationship between these two factors proved to be quite strong, implying a level of fraudulent and erroneous activity that may have occurred prior to the restatements. The CEO of Hertz, Mark Frisora, resigned as Chief Executive Officer in 2014 and also stepped down as chairman. So the likelihood of CEO turnover in relation to earnings restatement should act as a disincentive for managers who would want to avoid losing their job, should not deceive shareholders. We could relate this to Jensen and Meckling's agency theory and what they concluded could be done to minimise agency costs, including the cost expense to reverse the problems that arise from the opportunistic behaviour of managers. CEO turnover could be seen as a dishonest and unintentional signal from the company that there's been some fraudulent actions and these have resulted in the earnings restatement. The resignation of Frisora would have acted as a negative signal, which would suggest that the company was in trouble and potentially untrustworthy, which could also lead to a fall in share prices.
I'm going to talk about how Hertz use impression management in their annual report and in their restatement slides. In the 2015 restatement slides, Hertz use a lot of positive language to show that they're going to build and learn from their mistakes. However, they do use negative language to acknowledge that they have misrepresented their information and have had to restate their earnings. In 2011, you can compare this to when all positive language is used, in fact like 90 positive words. Best was used 15 times in the 2011 annual report and only 2 in the 2015 restatement slides. Hertz provide lots of graphs and also they put pictures of their new CEOs and financial officers as well as their new experts. And this is to reassure stakeholders that these friendly faces are going to be taking care of their money and that they have all these new staff to take care of the problems that they faced in the past. Hertz also use graphs to show how they're going to buy back all their shares and then build upon by reinvesting into the company, resell shares at hopefully a higher price when their share price returns. Luckily, thanks to their £1 billion buyback, they were able to do this, and they provided a full 2015 forecast with all of their cost-saving initiatives, which they would implement in the next few years. As you can see, Hertz use language to show they will continue to be a strong company and they intend to make a comeback from their restatements.
Further methods used by Hertz with impression management. They like to blame external factors as a result of them having to restate their financial statements. Their main excuses include blaming customers, the weather, and international foreign currency market. Another major factor of impression management that Hertz use is to blame their previous CEO. When looking at their financial statements, when they explain their previous behaviour from their previous CEO, the impression isn't initially negative. However, upon criticising this, they use words such as which and may, which suggests that even then they still aren't trying to lay the blame upon themselves and they're still looking for external factors to blame.
In the Hertz post-restatement plan, the company reaffirms its position to buy back $1 billion worth of shares and to separate the HERC from the main business in the second quarter of 2016. In addition, their annual cost savings target increased to $300 million. Hertz hosted a conference call and webcast to reassure shareholders that they would be able to live up to these expectations. In conclusion, Hertz unfortunately suffered a massive blast back from both the media and also from shareholders. They managed to rebuy back all their shares they intended to buy back. Hertz is now tainted by having to restate their 3 years worth of earnings and their CEO having to have resigned. They try to use impression management to reduce the impact on their investors and shareholders, and they devised an efficient and successful solution to overcome their problem. Luckily for Hertz, they had enough liquid assets and capital to buy back shares and cover the costs that this restatement's earning has imposed. Thank you for watching.